If you enter your options orders wrong, you're going to lose money, right? This is something that you cannot afford to mess up. So in this video, we're going to cover how you can set up your orders, especially the vertical spreads in TastyWorks. First, let's just cover the minimum information that you need, and then Mike is actually going to walk through on a live platform on how you do it. And while we're getting started here, make sure you hit subscribe and that notification bell. We'd appreciate that. So when you place orders, there's some minimum information you need. First thing, put or calls. Put option gives you the right to sell a stock at a certain price by a certain date, and the call option will give you the right to buy a stock at a certain price. You're going to need a strike price, and that is the price at which the underlying asset can be bought or sold. So let's say you have a call option with a strike price of $50. This means that you have the right, but not the obligation, to buy shares of that asset at $50 per share. Even if that asset is $100 per share, you can buy it for $50. The expiration date is just simply when you must exercise your option buy. And if you don't, and it expires, it can become worthless. Number of contracts, you're just going to need to specify how many contracts. Just keep in mind that one contract represents 100 shares of the underlying asset. Your order type, limit or market. The limit orders means you're willing to buy or sell at a certain price or better. A market order, you're willing to buy or sell at whatever the market's going to give you. The duration, day or good to canceled. And all this means that if you use a day order, if you're not filled, it'll be canceled. And a good to cancel order means it's going to stay open in your platform until it is either filled or you cancel it. Now, vertical spreads, they can be confusing. Right? It's a lot different than just buying a straight call or put. When you're talking about vertical spreads, you're buying one option, you're selling another of the same type, expiration dates with a different strike price. Vertical spreads are actually our favorite approach to trading options, and setting these up sometimes can seem a little bit intimidating. And a lot of traders shy away from these because they get confused on how to set them up. But we don't want you to do that. We want you to have these in your trading toolbox. So our in-house options expert, Mike, he put together a video on how you can implement these inside the TastyWorks platform. And we're using TastyWorks because it's one of the most popular platforms around for those who trade options. So enjoy the lesson. Let us know if you have any questions. You can do that in the comment section below. And make sure you hit like and subscribe. Take it away, Mike.
All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks. And in this video, I want to walk you through how to place credit spreads in a TastyWorks platform. In a recent video, I took a look at the Thinkorswim platform, which is phenomenal. I use it in part of my own trading, but for a majority of my options trading these days, I actually prefer the TastyWorks platform. I think it's very easy to use, very user-friendly, both with their desktop platform as well as their mobile app. So I will walk you through the steps that I follow to place those trades here today. So let's go ahead and dive in. And before we do that, if you are using any of the other broker platforms out there, there's a ton of different option brokers out there. That's fine. The ones that we're covering in these videos, Thinkorswim and TastyWorks, they're just our preferred platforms, ones that we use on a daily basis, so we're very familiar with them. If you're using Fidelity, for example, not saying you shouldn't use them. You can. I'm just not going to be the best person to train you on that platform since I don't use it personally. All right. I can show you TastyWorks and Thinkorswim because I'm active in those platforms each and every day. All right. So when you log into TastyWorks, over here towards the left-hand side of the platform, you are going to see a vertical toolbar. We're going to go ahead and select the trade tab right there. Now, once you click on the trade tab up towards the top, you're going to have different trade modes. You're going to have table, curve, active, grid, pairs, analysis. The one that I am using 99% of the time is the table mode, and that's the one that's going to be selected by default. That's going to show you the different expiration cycles down here at the bottom. On the left, you will see all of the weekly and monthly options that are available. All you have to do is click on any of these. If you click on the little arrow, it'll bring up a drop down that shows you all of the individual strike prices, along with the bid and ask prices of those different options. So you will see the calls on the left and the put options on the right. So for this example, I'm going to switch the symbol from Caterpillar to SPY. This is the S&P 500 ETF. And in this video, I want to highlight how to place credit spreads because that's what we've been talking about recently in a lot of our blog posts. Those are the trades that we've been using most often on our side, just given the current market environment. So what we want to do here down towards the bottom is I want to select the proper expiration cycle. I'm going to show you an example of one of our overnight pop trades. It's a trade that we just put on here earlier today. And it's a trade that expires tomorrow. These options only have 1 day left to expiration. So I'm going to open up the October 16 options. Go ahead and click on the little arrow. And that shows you all of the strike prices that we have available to us. Now, by default, it's only going to show you a handful of strikes. In the upper right-hand corner, there's this box that has a drop-down menu. If you click on the little arrow, you can load up a larger number of strikes, smaller number of strikes. You can change how many are shown here. I'm just going to select 20 here for this example. So now it's going to show you 20 strikes on the call side, 20 strikes on the put side. And for this example, we are going to talk about selling the 346, 344 put spread. This is a neutral to bullish position. We are expecting the market to either stay sideways or move to the upside going into expiration tomorrow. So to place that trade, what I'm going to do is come over to the put side on the right-hand side. And if you're selling the 346, 344 put spread, what that means is I am selling the 346 put and I'm buying the 344 put at the same time. To sell the 346 put, I'm going to come over and I'm going to left click on the bid price of that 346 put. Once I do that, it's going to box that option in red. That's indicating we're creating a sell order. At the same time, I want to come in and buy the 344 put. So to do that, I'm going to come up and click on the ask price of the 344 put. Once I do that, it's going to box that option in green, indicating it's a buy order. Once I do that, now I have two different options selected here. Down at the bottom, this is where we can start to customize the features of the order. In the lower left-hand corner, you will see the summary of the order, where I am by default selling one 346 put. STO stands for sell to open. And then I am buying one 344 put. BTO stands for buy to open. I can change the quantity here. Right now it's set to 1. If I come up and click on the left and right arrows in the quantity section here, I can change the quantity from 1 to 5 to 10. You can change it to however many contracts you want to trade. As I click these arrows, notice how both numbers are changing. This is done as a vertical spread. Even though we're trading two options, we're doing this as one trade. All right, it's done as a vertical spread. Now in the middle section, I can change the price. Right? By default, it's going to show you the mid price between the bid and ask. So every option, every spread is going to have a bid price and an ask price. There's always buyers and sellers there. And what it's going to do here down at the bottom is it's going to show you this order price at the mid. It's the mid price between the bid and ask. Okay, now I can always adjust that price higher. I can either click on the up or down arrows to adjust the price higher or lower, or you can simply just type over the price and change the price if you need to. All right. Now, what we want to do on these orders, whether it's an opening order or a closing order, we want to get filled as close to the mid price as possible. Now, we're not guaranteed to get filled there. If we can get filled at the mid price, that's the best scenario for us long term. That's going to maximize our profit potential. The problem there is we're not guaranteed to get filled on this order. This is a sell order. We're selling this spread to open up a position. Anytime that you are selling an option or selling a spread, I don't care if it's selling to open or selling to close, you want to get the highest price possible. It's just not always realistic to get filled at the higher price. If you place this order and you can't get filled, what you can do is come in and adjust the price lower. Right? So if I adjust this price from 45 cents down to 44 cents or 43 cents, it's going to increase my chances of getting filled, but I'm also giving up some profit potential in doing so. If I adjust the price from 45 cents down to 43 cents, well, I give up $2. Okay, I give up $2 per spread, which doesn't seem like a big deal, but in the long run, if you start to add that up, let's say you're trading 10 contracts and you're taking dozens of trades, all of a sudden a few pennies here or there, that adds up in the long run. So we do want to get filled at good prices. We want to get you into that routine of trying to get the best price possible instead of just coming in and using a market order saying, just get me into the trade now. It's a bad habit to get into it. I see way too many people taking that approach. Out of fear of missing out on the trade, they just want to get in immediately. I actually take the other side of that. I want to get filled at a good price or not at all, especially with a credit spread where we have a defined profit potential. It's going to be a smaller profit potential when compared to a long call or long put. I want to be very picky on where I get filled at. So my goal is to get filled as close to the mid price as I possibly can. All right. Now, if it was a buy order, if I'm creating a buy order here to open or close and we can't get filled at the mid price, then you could bump up the price higher. As you move the price higher on a buy order, you're going to increase your chances of getting filled. But again, as you adjust that price higher, you give up some profit potential. So you want to get into that routine of trying to or attempting to get filled as close to that mid price as possible. All right. So let's go ahead and I'm going to go ahead and change the price of this order up to 55 cents. And I'm going to go ahead and review and send. So now once I send this order, there's a couple of sections that you can go to see the status of that order. You can come over to the positions tab. Okay, and you'll notice that I have a working order. If I click on SPY here, you're going to see a drop-down menu, and you will see I have a working order here. And my limit price is 55 cents. The current market price is kind of bouncing around between 46 and 48 cents. So I'm asking to get filled at 55 cents. The price is 9 cents lower. I'm not going to get filled at 55 cents here. In order for me to get filled at 55 cents, I would need a move lower in SPY. Now, let's say I place this order for 55 cents initially. I don't get filled. A couple of minutes have passed and you're saying, all right, not realistic to get filled at 55 cents. Can I adjust the order? You absolutely can. So I can just go ahead and right click on this working order and select replace order. Once I click on replace order, it's going to take me back to the trade page, and this is where I can adjust the price. Okay, so I can adjust it from 55 down to 53 cents or 52 cents. Just switch it down to 52 cents, click on review and send. And now if I go back over to the positions tab, now you will see I still have that working order, but now my limit price is at 52 cents instead of 55 cents. Let's say you wanted to cancel the order altogether. You can't get filled at your price. You're saying, hey, I don't want to chase the trade. I just want to cancel it altogether. You can just right click on that working order and select cancel order. And that will go ahead and cancel the whole thing out. All right. Let me go back over to the trade page, walk you through a couple other things here. All right, down at the bottom, once you have your price set and you've got your quantity set, over towards the right, you've got a section for order type. If you are creating a sell order, you want that order type to be set to net credit. If it's a buy order, you want to set it to net debit. Okay. TIF stands for time in force. Right now it's set to a day order, meaning if I place this order now and I don't get filled come end of the day, that order is going to automatically cancel. If I click on the drop-down menu, the other option would be GTC, or good till cancel. What that means is that order stays in place until I get filled or I manually come in and cancel the order. Meaning if I don't get filled today, this order is still going to remain active going into Friday or even Monday. It's going to remain active until you get filled at that price or until you manually come in and cancel the order. What I've been talking about in our recent blog post is if this is an entry order, you're trying to enter into a position, I would recommend using a day order. If it is a closing order, if you're trying to close out of an existing position, that's when I would be open to using a GTC or a good till cancel. Right? That's our criteria. Those are our rules that we use for our own trading. All right. Now we've got the position on. I actually placed a sample trade here earlier today just so I can show this video. So we've got our position on. We place the trade. We show our position here on the positions tab. If I click on SPY, it'll give you that drop-down menu and show the exact position. It will give you your P&L for the day and the P&L since you opened the position. You're going to have two different P&L numbers there. That top number, the $45 number right there, that is the overall P&L of the position. Down below that, you will see the P&L for each individual leg of the credit spread. It'll show you the P&L of each of those options. On a credit spread, we are always going to win on one of those options and we're going to lose on the other one. Obviously, the goal here is I want to win more than I lose. So right now, we're currently up $45 on this trade that we just walked through. if I wanted to close out of this position. I can do it right here from the Positions tab. And what I want to do is hold down the Shift button on the keyboard. And while I'm holding down the Shift button, I can go ahead and you can actually just left click on each option as well. So if you left click and make sure that they're both highlighted in gray. Once they're both highlighted, I can go ahead and right click on either one of those options. Once you right click, you're going to see a drop down menu. And one of the options there is to go down and close. If I hover my mouse over close, you're going to see 3 different options here: balanced, default, and full. I'm going to select the full. I want to close out of my full position. So if I left click on the full, it'll take me back over to the trade page where I can again adjust the price of my order. So let me go ahead and adjust this price of this order down to 13 cents. Again, this is a closing order, right? So I don't need to use a day order. I can set this to GTC. Okay, good till cancel. So now I've set my price to 13 cents. I've changed it to GTC. If I review and send this order, now that order is in place. If I go back over to the Positions tab, I'm still going to see my position here, but now I can see a working order. My working order is for a 13-cent debit. The current price, the mid price, is at 46 cents. So I'm nowhere close to my 13-cent price, but that order is going to remain in place going into tomorrow. It's going to remain in place until I get filled at 13 cents or until I manually come in to adjust the price of that order or cancel it out altogether. So I don't mind keeping that working order in place. All right. So pretty simple process. And again, if you want to shrink that down, if you don't want to be distracted by all of the different lines there, you can just go ahead and click on SPY again. It'll shrink that down and it'll just show you the P&L for all of your open positions, your P&L for the day and P&L since you opened the position. All right. Now let's go back over to the trade page. What we just talked through, that is the approach that you're going to take when you're just selling an outright put spread or selling an outright call spread. Here, if you're just doing one side or the other. If I wanted to come in and sell a call spread, you would do the same exact approach that we just talked about on the put side. You would come to the option that you'd want to sell. So if you wanted to come and sell the 349 call, you would come in, left click on the bid price of that 349 call. Once you do that, it's going to box it in red, creating a sell order. And then you would left click on the ask price of the option that you want to buy. It's going to box it in green, indicating a buy order. You can then go down to the bottom, adjust the quantity. Right now it's set to 1. You can adjust the price. You can also switch it from a day order to a GTC if you wanted to. Once you have done those steps, you just confirm and send the order. So you can do the same process on the call or the put side. It does not matter. Now, let's go ahead and take it one step further. Instead of doing either the call side or the put side, let's talk about doing both at the same time, and let's create an iron condor. We also did a blog article here recently covering the iron condor as well. So let's go ahead and take a look. Let me clear that order out. And let's just say for our example, we wanted to come in and sell the 350, 352 call spread. And then we'll take a look at selling the 344, 342 put spread. Okay, so I'm going to come to the 350 call. I'm going to left click on the bid price of that 350 call. It's going to box it in red, indicating a sell order. And then I'm going to left click on the ask price of the 352 call. It's going to box it in green. On the put side, we can left click on the bid price of the 344 put, and then left click on the ask price of the 342 put. Okay, as I do that, anytime that they're boxed in red, it indicates a sell order. Anytime it's boxed in green, it indicates a buy order. Down at the bottom, you will see we've got 4 different options loaded up. That is an iron condor. Selling an out of the money call spread, selling an out of the money put spread at the same time. That is classified as an iron condor. If you need more detail on that, highly recommend that you go over and take a look at that blog post where I break it down in more detail as to what constitutes an iron condor, why would use that trade, and how we would manage it, and so forth. Now, let's say we load up this trade, but we want to make some adjustments. Let's say you wanted to play around with the strikes and move them around to different strike prices. Do you have to start all over? Do you have to come over here and clear out the order and start all over? You don't. What you can do here is you can drag these orders. So you can see that I've got all 4 loaded up. We've got the red and green boxes. Let's say I wanted to switch the strikes from 350 and 352 to 351 and 353. All I have to do is left click on that order and drag it down. Drag it down from 350 to 351, and then drag the 352 down to 353. All I'm doing is left clicking and dragging them up and down, and you can change the strike prices accordingly. You can do the same thing on the put side. If I wanted to switch the 344, 342 to 343, 341, all I have to do is left click and drag them up and down. Very, very simple process. And as you do so, it's going to automatically adjust the order down at the bottom left portion of the trade page. So you can go ahead and review that. You can change your price. You can change your quantity. Same process there that we talked about earlier when selling the put spread. Same process is there. Once we have it set the way that we want it, make sure it's set to a net credit because we are selling to open this position. Make sure it's set to a day order because this is an entry order, not a closing order. We want to use a day order. If this was a closing order for an existing position, then yes, we could change it to a GTC, but we want to use a day order in this case. Should have mentioned this earlier. When you click on review and send, it's really easy just to come in and quickly hit that send order button. Make sure you're reviewing your orders. I can't tell you how many times I have caught myself where I'm reviewing my order and I notice, hey, I've got a wrong quantity in there, or I've got the wrong strike price, the wrong price. Make sure you're reviewing those orders. It's easy to get busy throughout the day. Try to get an order placed. I do it all the time when I'm on the phone with a student and I catch myself. I catch a mistake. So just review that page and then go ahead and send the order. Okay, so pretty simple process. TastyWorks, there's a lot of bells and whistles in this platform, guys. What I just showed you is just one way of placing orders. Some of you might be looking at that saying, Mike, there's a completely different way that you can place an order that seems like it'd be easier. There are multiple ways of doing it. This is just the route that I take. This is what I am used to. I find it's easiest for me. It's an easy way for me to stay consistent and follow the same steps every time. So if you have any questions, need more help getting these orders placed or getting positions closed out, you can always contact us directly. Send me an email, mike@netpicks.com. More than willing to help out. TastyWorks does have a phenomenal support team as well. They are more than willing to help out with any orders that you need help with as well. So at this point, I'm going to wrap this video up here. Again, feel free to post any comments on the blog post or the video, and we are more than willing to help out. So I will be back with you guys over the next few days with our next video. Enjoy your afternoon, and we'll talk again soon.